take the requisite steps to formally open this morning's meetings.
Can anyone hear us here?
That's a good idea. Let's do a little sound check.
I think everyone, Dave, could you just turn the mic on? Mr.
Or at least when you intend to speak.
Just, Professor Ford, if you could just turn
just hit that red button there. Right there.
in front of your.
Yes.
There we go. Now everybody can be heard. Okay, great.
No, now you're wrong. Yeah.
I note that Morris Peters, representing the Director of the Division of the Budget, is participating in the meeting via video conference from the New York State Division of Budget Conference Center at the Capitol Building, room 131 in Albany. Notice of this location has been made public, and the public has the right to attend and observe the proceedings from this location. I will ask for a motion for the SONYMA board. Second?
I'll second it.
I will now ask for individual votes from each SONYMA board member. Chairman Adams?
So moved.
Ms. Wisnauskas?
Yes.
Mr. Peters? Okay. We don't have.
Yep, we don't have.
We don't have. Okay. Professor Ford?
Yes.
And we don't have Mr. Freeman?
Not yet. Yep.
Not yet. Okay. Mr. Capel?
Yes.
Okay. I will ask for a motion for the SONYMA Mortgage Insurance Committee.
Aye.
No, second.
Second.
I will now ask for individual votes from each SONYMA Mortgage Insurance Committee.
Let me try that again. Aye.
Mr. Peters?
Yes.
Ms. Wisnauskas?
Yes.
Mr. Capel?
Yes.
Okay.
All right. We're going to move. Thank you very much, Dinah, for getting us started. We'll move to our SONYMA agenda for today. The first item are the minutes of the SONYMA and SONYMA Mortgage Insurance Committee meetings that we held back in May, on May 16th, 2023. And they should be deemed approved absent corrections from directors. So let's pause to see if anyone has any corrections or suggestions for the minutes from May 16th. Okay, then we'll go to an item that was added to our agenda and was sent to board members by separate cover. It's number 2 in our board books today. And it's a resolution authorizing the transfer of excess MIF or Mortgage Insurance Fund reserve funds. Mike, I think you're going to walk us through it.
Yes. So Article 7 of the state 2023-2024 budget requires the MIF to transfer $97.7 million to the Housing Trust Fund Corporation and the Homeless Housing Assistance Corporation. First, from the special account in an amount not to exceed the excess balance in the special account. The excess balance in the special account was $54.6 million. We previously transferred $12.7 million from the special account to the Homeless Housing Assistance Corporation. Last Wednesday, the Division of Budget requested the transfer of an additional $46.9 million to the Housing Trust Fund Corporation prior to June 30th for aggregate transfers of $59.6 million. However, we only had $54.6 million in the special account. So we have to transfer an additional $5 million from the project account to the Housing Trust Fund Corporation. The directors are hereby requested to authorize the transfer of $5 million from the project pool insurance account to the Housing Trust Fund Corporation prior to June 30th. The project pool insurance account is currently rated AA1 by Moody's, and a release of $5 million out of $22.5 billion in insurance reserves would not affect Moody's AA1 rating.
Thank you, Mike. Any questions for Mike on this? A little, prior to June 30th. I like that. It's a little deadline here.
Yes.
Someone wants the money.
Hence the phone call last Wednesday.
Yes. Right. Well, if there aren't any questions for Mike on the transfer, why don't we take care of it, Diane, please?
And just, Alex, I just want to note that, for the record, we'll note that Mr. Freeman has arrived.
Yes.
Good morning. Good morning. Good morning.
Now before SONYMA board is a resolution that was transmitted in connection with this item. Assuming the first and second previously entered for the SONYMA board, all in favor, please say aye.
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 Motion is carried, the resolution is adopted.
Pages are sticking together. Now we're going to move to an approval of the Sunny May projects on the agenda. We've got several, most of them right here in New York City this time around. Number 3, resolution of Sunny May Mortgage Insurance Committee approving 100% mortgage insurance on a $2,103,380 LISC or LISC permanent first mortgage loan for a project at 102 West 119th Street here in Manhattan, New York County. Mike, do you want to introduce that one?
So we have an interesting agenda this morning. There are 5 loans from 4 different insured mortgagees. When we consider a loan for insurance, we first look at the insured mortgagee. And if it's a government entity like HFA or HDC or a fellow government entity with the same public purpose that we have, we insure it for mortgage insurance. If it's a non-government entity like CPC or LIF or LISC, we require that the affordability of the project not exceed 120% of the area median income and the loan amount per unit not exceed $250,000. None of these loans fail to meet those parameters. We have no set requirement for developer fees. The developer fees on conventional mortgages, like the 5 loans today, tend to be very modest. The developer fees on the 2 CBM annual loans, the cash developer fees are 4%. The cash developer fee on the Banana Kelly project is 2%. And the other 2 loans have no developer fees. On loans financed with tax-exempt bonds, the developer fees are set by, the max developer fees are set by the IRS. So the $2 million LISC loan for 119 West 119th Street, 102 West 119th
Yeah,
Street.
start with that one.
Comprises the rehab of 18 units. The project will preserve moderate income rental housing, and all of the units are restricted with incomes up to 120% of AMI, with rent set at 100% of AMI, pursuant to an HPD regulatory agreement. In addition to the insured first mortgage, there's a $10.9 million HPD Affordable Neighborhood Cooperative Program loan. And there's a full 40-year Article 11 real estate tax abatement. The project is being developed by CBM Annual. And despite the HPD cooperative second mortgage, this is intended as a rental project. The insured loan amount is $116,000 per unit, which equals 15% of the project's total development cost of $782,000 per unit. And the project would break even with a pro forma 18% vacancy rate or a 31% increase in operating expenses. Exhibit F, it's the last page of the project summary, shows that this is the 12th loan that we will insure for entities controlled by CBM Annual, with total loan amount of $48.6 million.
And several others by LISC, by the way, right? The mortgage.
Yes.
Yeah. Great. Thank you, Michael. And thanks, thank you for, reviewing some of for sharing that background information about, basically what happens to different parameters based on the type of mortgagee. Any questions for Mike on this? We'll see the project later on, I think.
Quick question.
It's not a-
The income rating is based on what parameter as far as
It's set by HPD.
by HPD? Over what range of time? Like,
I
is it
think
the median
probably-
income now or
it's-
5 years ago?
Probably for the next 40 years, the life of the regulatory agreement.
they would use today's, like the HUD published area median income at the time that they closed the loan would be customary.
Here comes Joyce.
That's what you mean, like where they pull from the HUD
Mhm.
standard.
And they do theirs every 5 years, 10 years,
Oh, every year HUD
every year?
releases the new FMR, the new
Morning.
PMI.
Sorry, we ran into traffic.
Morning. Oh,
Tell me
Joyce,
about it.
welcome.
New York City in the summer, you know.
Yeah. Good, thanks, Joyce. Any other questions for Mike on this,
For an item 2
Three.
of the 3? Right, the first deal.
Joyce,
Hi.
when you get settled in,
Hi,
it's,
Joyce.
give you a moment to catch up. If there are any other questions about this project, we have several that are like it.
Wow,
Let's,
it's tables.
Gotta get that nailed in.
Diana, will you do the honors, please?
Yeah, and just for the record, let's note that Joyce Miller has joined the meeting. Now before Sunny Mae Mortgage Insurance Committee is a resolution that was transmitted in connection with this item. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please say aye.
Aye.
The motion is carried and the resolution adopted.
Diana, thank you, everybody, thank you. Let's go to number 4, a resolution of the Sunny Mae Mortgage Insurance Committee approving 100% mortgage insurance on a $3,944,649 LISC permanent first mortgage loan for a project at 110 Lenox Avenue, also here in Manhattan. Mike, back to you.
So this involves the substantial rehab of one building with 17 units and 3 commercial spaces. This is intended as a co-op. LISC has asked us for a commitment to ensure a rental loan as a fallback if it fails as a cooperative. In this project, like the previous loan, all units are restricted to incomes up to 120% of the AMI with rents at 90% of the AMI. There's a 10.3 million HPD second mortgage and a full 40-year Article 11 real estate tax abatement. And the rehab comprises the replacement of all building systems, new windows, elevators, roofs, gas-fired boiler, kitchens, bathrooms, and the construction of 2 additional units.
And it's the same development team we saw in the
Yes,
last
it's
slide,
also,
right?
sorry,
Yep.
it's also CB Manning. The
Great.
insured loan amount is $232,000 per unit, which equals 25% of the project's total development cost of $911,000 per unit. The project would break even with a 28% pro forma vacancy rate or a 56% increase in operating expenses.
Great. Any questions for Mike on this project? Diana, let's
Yeah.
consider some insurance. What do you think?
I think we'll go for it. Now before Sunny Mae Mortgage Insurance Committee is a resolution that was transmitted in connection with this item. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please say aye.
Aye.
Motion is carried and the resolution adopted.
Now we're going to go down to West Midtown, heart of the theater district, as it says in the description. For number 5, a resolution of the Sunny Mae Mortgage Insurance Committee approving 100% mortgage insurance on a $5,127,356 million CPC permanent first mortgage loan for a project called the Woodstock, 147 West 43rd Street in Manhattan. Mike, back to you.
This project comprises the mod rehabilitation of a 12-story building with 291 SRO units and 2 commercial spaces. And of the 291 SRO units, 225 have Section 8 vouchers. This is an interesting project. This was originally a hotel. Project Find leased it from the developer and converted it to supportive housing in 1969. So it's been a supportive housing project for 54 years. So they were really ahead of their time in doing the conversion of a hotel into supportive housing. There's a full 420C real estate tax abatement. The insured loan amount is only $17,600 per unit, which equals 84% of the project's total development cost of $22,600 per unit. And there is no developer fee in this project.
Yeah, big building. Is it currently occupied?
Yes, yes.
So how's that gonna work? What's gonna happen there?
I think they're gonna, well, it's
been done.
pretty,
Oh, yeah, it's actually.
it's
been done.
really, it's pretty modest rehab.
Right,
So I think they're just gonna do it with tenants
and
in
then move
place.
tenants around, go apartment by
Right.
apartment.
Yeah, it's conversion to gas heating.
Right.
Most of it is the boiler and the burner. Yeah, the heating.
I may be the only person at the table that's actually lived in an SRO at one time,
Really?
too. I lived in the Manhattan Towers Hotel on Broadway and 76th Street, and then at the Paris Hotel on 97th and
Oh,
West
wow.
End Avenue.
Shared bath?
No, private
Private
bath,
bath?
yeah.
It was home. He was homeless.
Is the backstory going to be in the Capel
There's a
memoir?
serious backstory, but we're not going to get into that today.
Paris sounds pretty elegant there, Dave. You know.
Paris had an indoor pool, which was
Yeah.
nice, yeah.
So
I had a huge terrace at the Manhattan Towers.
Down and out in New York City.
That was a depressing place. It basically was a receiving unit for the families that were getting burned out of the South Bronx.
Oh.
Every night, emergency squads would show up with families that had been burned out and placed.
I
in
worked
that
for
hotel.
HPD then.
Did you? Yeah.
Yeah.
It was a humbling experience. Let me put it like
I
that.
tell you, it was frightening. And when you came in the morning and heard about how many of our buildings had burned.
Burned down.
Yeah.
Yeah.
Well,
But I'm probably the only person on this board who has had boiler and burner training.
Have you?
good to know.
I couldn't install it today, but I did go through the training.
Another small chapter in that.
Good to know.
I ran out of money.
Management company, we have any problems here?
I ran out of-
Joyce Miller.
I ran out of money while I was living at the Manhattan Towers, and they had a system there for eviction. They would, they had what they called a plug, and it was a key, a master key that they would saw horizontally so that they could separate the shaft from the I don't know what you call the teeth that actually operate the lock. So they put those in together and then withdraw the shaft, and it disabled the lock. So I came home about 2:00 in the morning one night, and I'd been keyed, you know, so I couldn't get so I went downstairs. I said, "Look, I don't have any money, but I'm happy to work." Make a long story short, they made me the night watchman. And for I don't put that on my resume anymore. I used to.
That's a mark of tremendous resourcefulness.
Well, you know, survival.
But that's
Yeah.
it. But you
Yeah.
know, like you could just give up, right? But you didn't.
No.
What a board we have.
Anyway, that's enough of that story.
Yeah, the plumber.
Thank you, Mike.
The pressures.
There's a lot more
Anything
to
that
it.
Mike could share to
I want to
change
hear the Long
anybody's
Island
view about
backstory.
Long Island story.
providing insurance to this project.
Now we're all sympathetic to
I'm
SRO.
all in favor.
The work's been done, by the way, we're just financing it afterwards. Okay, or providing insurance
Okay.
to this, in case it matters. Let's make it happen, Diana, please.
Now before SONYMA Mortgage Insurance Committee is a resolution that was transmitted in connection with this item. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please say aye.
Aye.
The motion is carried and the resolution is adopted.
Thank you all. Let's try number 6. Resolution of the SONYMA Mortgage Insurance Committee approving 100% mortgage insurance on a $4,547,000 LIF. This one's a LIF, permanent first mortgage loan for the BK Cluster Phase 2 project, which is in the Bronx. BK, that must be Banana Kelly.
It is.
Yeah, it is, from the address.
So this project comprises the rehab of 75 units, which will include 42 homeless units, 10 low-income units, and 21 rent-stabilized units. Of the 42 homeless units, 26 will receive city FEPS program vouchers, and 16 units will receive project-based Section 8 HAP contract vouchers. And the 31 occupied units, the low-income units, and the rent-stabilized units have rents affordable up to 60% of the AMI. It's a heavily subsidized project. There's a $27.2 million HPD city capital loan. There's a 17 million existing HPD acquisition loan. There's a full 420C real estate tax abatement. The project is being developed by Banana Kelly, which has a portfolio of over 1,200 units. The loan amount is $60,000 per unit, which equals 8% of the project's total development cost of $724,000 per unit, inclusive of the acquisition debt. Exclusive of the acquisition debt, the loan is $461,000 per unit. And this is the 10th loan that we will insure for projects controlled by Banana Kelly, with a total loan amount of $46 million.
Any questions for Mike about this project in the Bronx? Mike, the loan to value ratio is 28%. A little high. Okay.
A little low,
A little low.
a lot low. Right? Much lower than we would normally
Yes.
have on our. I don't know if folks will remember, but these were the buildings that the city bought because they were they were owned and operated. They were owned by someone who was operating them all as shelters, and then the city went and bought them all, and then they're converting them occupied as shelters into now giving people leases and making them permanent houses. So we had done some last year, and we did some of those, and this is the city transferring, because they bought them from this central, I think, sort of Banana Kelly entity, but these were previously run as shelters, and now will be permanent housing for the people who are there.
The loan value is so low because of all the subordinate debt. There's 45 million in sub-debt behind the 4.5 million loan that we're insuring.
Yeah, you're talking about the HPD, right.
Yeah.
Right, okay. Got it.
And that's why they have a big acquisition price, because these were purchased from the private sector. By the city.
By the city. And then they turned them over to Banana Kelly.
Yeah, I forget how many they bought, but then they used a series of nonprofits, geographically based. I think they're complicated to do, and so they gave different organizations different parts of the portfolio.
Kind of like the land bank projects. They would buy them,
Yeah, not dissimilar, right?
get a
And then-
provider to come in, have them redo the projects, and then provide them out through nonprofits.
Yeah, it's a good. I think it's been a good success for these buildings.
Okay, good. Thanks, everybody. Any other questions for Mike on this?
But just that, now Banana Kelly obviously has been around for a long time. Excuse me. And so, am I correct in assuming that their record has been very good over all this time? Number one, and number two, do we see other entities getting involved in this type of work, or do they collaborate or co-venture, any of those kinds of things?
Well, they're with this project, they're going to work with Joe, which is a joint ownership entity of not-for-profits.
Okay. Not Biden.
Pardon?
Not Biden. Small Joe.
Different show.
And lately the track record has been excellent.
Okay. All right. Thank you.
Good, thanks. If there are any further questions on this project tonight, let's move it.
Now before SONYMA Mortgage Insurance Committee is a resolution that was transmitted in connection with this item. Assuming the first and second previously entered for the Mortgage Insurance Committee, all in favor, please say aye.
Aye.
The motion is carried and the resolution adopted.
Fantastic. Let's go to number 7. Resolutions of the SONYMA Mortgage Insurance Committee and the SONYMA Board recommending and approving 100% mortgage insurance in the form of a 25% top loss insurance on an $88,170,000 HDC permanent first mortgage loan for the Bedford Union Army project in Brooklyn, Kings County. I think a project we've been thinking about for the last 10 years, before my time. Big, important project in Crown Heights. Mike, do you want to walk us through this?
Sure. So HDC is back. This is another REMIC risk-sharing project where REMIC is also taking 25% of the loan. So they'll provide insurance for 25% and we'll provide insurance on 25% of the loan. It involves the construction of 415 units, 25,000 square feet of community space. The project will provide 250 low-income units, including 25 supportive units for formerly homeless families, and 164 market rate units. It's a heavily subsidized project. There's a $15 million HDC second mortgage. There's 41 million in HPD subordinate debt. There's 35.6 million in federal low-income housing tax credits. And there are two pilots which are modeled after 420C and 421A. And that's because the land is owned by the New York City Economic Development Corporation. And there's a 66-year ground lease to the borrower. The project is being developed by BFC. And this is the sixth loan that we will insure for entities controlled by BFC, with a total loan amount of 193 million, but a liability amount of only 120 million, because we're insuring 25% of the $88 million Bedford loan and 50% of the $12 million HDC loan on the Albert Goodman Apartments. The insured loan amount is $212,000 per unit, which equals 43% of the project's total development cost of $496,000 per unit. So this is an efficient project. The project will break even with a 14% pro forma vacancy rate or a 23% increase in operating expenses. And we'll still have a pro forma income of 102 income to expense ratio with all of the community space vacant.
And they can make up any losses on the parking. In that neighborhood, people will pay dearly for that park.
Mike, I have a question about the ground lease. So the ground lease is the 66 years remaining on the ground lease. And the loan is for 30 years?
35.
35 years, okay.
We require that the lease be at least 20% longer
Right.
than the loan, so
Yeah.
it is.
Other questions for Mike on this project?
I just have a brief comment. I literally walked
it's
past
fine
this
for
venue
function.
virtually every day for the last 9-10 years on my way to Medgar Evers College. So Bedford is Bedford, our address is Bedford. And initially, the private developer was just going to build over the Bedford Armory. And I just think it's worth mentioning, Bedford Union Armory. I think it's worth mentioning that, obviously there was a lot of community engagement with respect to the situation. And ultimately, there is market rate development adjacent to the armory itself and whatever they're building on top of the armory, but it didn't have to happen that way. And this is where community engagement means quite a bit. And I'm glad to see that we're able to be supportive of that because of this type of project. Because as I said, literally it wasn't going to happen that way for a while. People pool, I think, in some tutoring space. And it went obviously a lot better than that. So I'm certainly glad to hear that.
So, Mike, this isn't a rehabilitation of the armory also. The armory is gone.
Well, as I understand, the armory is kind of they're building around it.
They're building around it?
Obviously within it as well, yeah.
Ah,
It's like-
okay, that's what I was wondering. Thank
Supposed to
you.
be like 3 separate ones, right? And the armory's in the middle,
I think the
and then they
community
have the
facilities
community
are
center.
built.
Yeah.
Yeah.
It's supposed to be a swimming pool, all that kind of stuff.
Yeah,
Swimming
that's,
pool,
that's,
Hey, that's
basketball
neat.
courts.
Can I get an appointment?
no, but there's just if I can add a footnote to Wallace's observation. The community facility, I think, is already built. And when you
Yes.
do that, when you build for the community first, before you do, even though this is
Right, it gets
residential,
built.
but this market rate, it's much better off because people see that, government is actually doing what it set out or what it said it was going to do. In projects that are mixed use and you save the community amenities for the very end, they don't do so well politically, right? Because people say, wait, what about the community benefits? And so here that the pool and that facility, it's already there. So,
Community
I have a question about the
benefit
insurance.
agreement
Why
for
is
the
Remick
town.
on us? Like, why can't Remick insure the whole loan themselves?
They're much smaller than we are. They don't really have the
It's the
insurance.
city of New York.
It's,
But Remick
You know,
itself is.
Remick is
their
small.
insurance, yeah.
yeah.
We're bigger.
Right, Remick doesn't have adequate insurance reserves to
well,
do these big loans.
We think HTC is a good credit, so. All right.
Professor Ford,
I don't know. Just asking.
Leland is saying when you speak, turn on
You're
your,
gonna question HTC's
on now.
credit rating?
Turn on, it's on.
oh,
Yeah, I clicked it.
Insurance.
Oh,
oh, you did it.
I was just speaking
Problem
up.
is it started bad as a small program.
I assume,
They're watching us.
you know, it keeps,
For a long
it
time,
keeps
they
the borrowing
weren't,
costs as low as possible. That's
you know,
why
for a
we-
long time, they weren't even using it,
Remick.
Remick.
I guess they brought it back. Well, Mike, thank you. If there aren't any other questions on this project in Brooklyn, Diana, let's please make it happen.
Now before Sunny Mae Mortgage Insurance Committee and the Sunny Mae Board are resolutions that were transmitted in connection with this item. Assuming the first and second previously entered the Mortgage Insurance Committee and Sunny Mae Board, all in favor, please say aye.
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 The motions are carried, the resolutions adopted.
Thanks, Mike.
Thank you, Mike.
Thank
Thanks
you.
for the presentation this morning. Thanks, everybody, for our Mortgage Insurance Committee actions. We're going to skip item 9 and
Which-
turn,
We might have made.
oh, we
8.
haven't done 8 yet. Oh,
Yep.
my goodness. These are an authorization to extend the term of contracts with the firms on the agency's pre-qualified panel for the provision of professional temporary staffing consultant services, right? This was in the board materials. There's a whole grid of all the staffing services that we use, right? And who is going to explain this?
We have it as a consent item, so if folks need
Requires little explanation.
little explanation, but if folks want an explanation, they can have it. I guess
This
Lisa's.
But this is, you're requesting our support to extend
Yes.
the qualified firms on the panel for another year. It's another year. Good morning.
Good morning. Yes, we have
Great.
15 firms on the panel, and we'd like to extend the authorization to extend contracts on the panel for an additional year. These are used for either to fill in staffing gaps or if there's a special project that firms need help with. I mean, the agency needs help with.
Yes. My usual question, of course, are any of the firms minority-owned firms involved here?
There are 6 minority-owned
6.
firms. There were 7. One is now on an uncertified MBE.
One of those firms is Penda, right?
Yes,
Which is Penda Aiken, I'm going to
that's
guess.
correct. That's
Oh,
correct.
Wow.
Downtown
Okay.
Brooklyn.
Yes, that name rings a bell, yes.
Yep.
Okay, that's
And we do
great.
business with Penda Aiken.
And they're staffed until permanent positions can be filled.
They may be used for just gaps, or they may be used for, some of them get converted at times from temp to perm.
Temp to perm.
But it may be like when we hit a crunch around like budget time, finance shop will bring in like a accounting person for 3 months to help get together the backlog, and then mostly we use it for sort of short-term,
Correct.
I think, engagements or special projects. This is not where we could, obviously, we can hire someone, we would hire someone. We have preference.
Right, I know it's not a given that the minority-owned firms would have Black and Latino personnel coming through. I'm assuming that would be the case, but it shouldn't. What about the rest of the firms? Do we have any notion of the makeup, if you will, of the staff that they bring in here?
I don't. Do you? You do? Okay.
And
Come on up, Karen.
Part of
Morning.
the proposal submission is a workforce utilization plan. And so each company must share with us their employee makeup based on race and gender. So we do know that.
And what do we know?
I don't have the
Well,
specifics, I can find that
just
out.
generally.
But what we do find is that many of the firms are majority female or minority. So, and it's something that we're looking for on the review committee in terms of workforce makeup.
Okay, I'm not sure I know what minority female means, but majority female rather, but.
Majority employees
Yeah,
at
well,
a firm or
I'm
people
sorry,
that they're working with.
pardon me for interrupting. I understand the words,
Yes.
obviously, but I'm not understanding what it means in the context of bringing on more Black and Latino people, male or female.
It's something that we are able to track, right? And so that's where we are. So we know who we're working with before we're contracted with them.
Okay.
And we trust that they are using fair hiring policies. And so we do see more diversity.
So we're seeing more diversity with these firms? Is that what you're
Yes.
saying? Thank you.
Thank you.
All right, thank you.
I had sent something, previously in an email, because I know Mike had brought up before about relationships that we have with certain companies and stuff. So for myself, I had requested, who are the firms that we have a long-term relationship with and the projects that they've worked on and how many? Because some of these, like BK, like you said, they have like 10, 15 projects that they've worked on. So who are these firms that we work with for 50 and 60 years sometimes? And what projects and what benefits have their projects actually done? Have they met that standard of what they said that they were going to do? So I'd kind of like to get that information to find out, who are these people? What is our relationship? How long have we had this? And are these projects really doing what they said they've done? And what the impact is in the communities that they do? So if we have the data, especially with hiring practices and other things, a portion of these housing developments that we're working with and community developments that we're working with, if 25 families are moving into a particular area, are they getting jobs from some of the companies that we work with? Are they being put in a position to where they're able to do better? You know, so that's kind of the information that I'm looking to get.
I mean, I'm not sure that,
James, beg your pardon, is your microphone on?
Yep, it's on.
Good. Yeah, well, we're having a little trouble making sure everybody can hear.
We're sharing.
Yep. Turn it that way.
and there's sort of a lot in there. I guess it would answer maybe a couple pieces of it. I think on the development side, we make sure that in the materials you receive, you can see every loan that we've done with that borrower. So, and as Mike had mentioned some of these talking points, and then I think there's, just looking to check myself, I think there's a sheet in here that shows every mortgage we've insured for that borrower. So you can see both when it was issued, who the lender was, you know, the project, all of that. And then as a part of Mike's process, there's due diligence to make sure they are, from an asset management perspective, performing, just in terms of are they doing what they were supposed to do as it relates to insuring the mortgage. So I think that piece is, we try to provide, but we can do more on that if there's more specifics.
So there's a look back component.
What's that?
So there's a look back
Yeah,
component.
so you can see, like, for instance, I'm looking at Banana Kelly, so you can see the 2007, 2010, 2015, 2006, you can see every mortgage we've given to them, who the borrower was, what the amount was, the project, the address, whatever, all of, you know, all the sort of, I think, baseline information. But obviously if there's more that you want to, we could add that in here. So you can see every loan we've insured for that borrower. And then that would also get checked against sort of an asset management to make sure there's no outstanding issues. And we require for anybody who borrows with us, if there's outstanding issues on any of their properties, they have to clear them before they get other loans. So if they have violations or anything like that, they have to clear those violations as a condition of closing. So, so that's sort of, I think, the what have we done with them, and are they performing sort of piece of it. I think your question on are folks that move into these buildings then getting jobs is not something that we have a way to track or isn't part of our sort of requirements for mortgage insurance, I guess, would be to have them report to us on tenant employment. But we could, I guess we could just sort of.
That may not be appropriate, given the programming for every development. A lot of these affordable units, you know, are random lotteries. So there's a large number of people applying, and for the supportive units, they're working with the not-for-profit sponsor to come and to be housed. But not all of them, depending on what their needs are, may be ready for work, or that may not be a part of their program.
Because that's one of the things that we did out on Long Island was that, like Fairfield, we had where we changed what they were doing as a requirement on how they were helping people because they were just giving them housing and dropping them in. Then we made it to where for the first 6 months, all they had to do was work on their addictions and stuff. And then after those 6 months, then they would work on getting them job ready and everything else. So in doing the housing, is it just providing the housing, or is it providing them with an access back into society to be able to be successful?
Well, certainly for any, I mean, for these projects here, it's probably a couple different things, right? Some of these are people, they're already existing in place, so they aren't coming in. But I think in any supportive housing, we would be ensuring 100% there are case managers, and whether it's mental health or substance abuse or domestic violence or whatever the population or youth aging on foster care, right? We serve so many different subpopulations. The service provider is contracted for, I would say they have like 10-year contracts or something that we go back and check. It's not a 6-month or 1 year, it's a very long-term contract that they get from the state to provide services to the individual to make sure they can be successful.
Okay. And there are other organizations that are reviewing this? Because I know we approved like the Jerome Avenue project and stuff, and who's looking back at that?
Yeah, so the service contracts all get administered by the service agencies. So in this case, it would be like the Office of Domestic Violence would hold those, the OTPA would hold chronically homeless, OMH would hold all the mental health contracts. So they all make sure that the providers are providing services via those contracts. And we just, they're part of our financing, but we don't hold the contracts.
If we go back to the Bedford Armory as an example, James, that's done Kaposha project, right? EFC project, and Breaking Ground is the service provider.
Right.
They didn't have in the proposal in the write-up, they still don't have a manager yet. Well, they may by now, but when this was written up, they didn't have someone as a manager. But what Breaking Ground will get, we don't finance Breaking Ground's service provision. That's a separate agreement they might have with DOH or DH or whatever the population is that's served. And you're seeing the pattern here. Almost all of the housing that we do finance now through these agencies is supportive housing.
Right.
So there is someone brought in, but we don't, because we're not subsidizing the support, it's being subsidized by some other branch of city or state government, and the accountability is to that funder and their internal program audit, their outside audit, they're the ones, we could ask them for reports and updates on, hey, how's it going? But that's where the accountability is going back to the source of the funding for the service provision, which is usually a social, Department of Homeless Services, for example, or Office of Mental Health, right?
And the social service agencies in New York City are great. I mean, like Breaking Ground, they are, A+.
But it's an interesting, maybe, thinking about this for a future meeting, it might be interesting to have as a guest presentation, someone from Breaking Ground to talk about what's going on with the people they're serving in a project that we finance. We don't have, again, control over that per se, but it would as an informational item, it'd be, I'm curious too, like, how's it working? Like, we make sure that the developer collects the rent and makes mortgage payments, and then, we collect mortgage insurance. So we have a financial responsibility, right?
Right.
Because we're providing with the financing to do the project. But the service provision, including who that people are, where they came from, what's going on, that would be interesting to, at least as an informational point, to learn more about it.
Going back to, and thank you for the presentation, certainly, is this distinction, and I was doing the math and scared myself because I've kind of been at this for 41 years. When I was New York State's first deputy commissioner for minority women in business with the Department of Commerce. And it's always been, from then to this very day, a matter of what do the statistics show? Number one, what are the goals? And then what do the statistics show? And when we have this MWBE designation, many times that does not work well for Black and Latino communities, because you also have the W designation, and many times a lot of that involves white women, and that's great, but there's the initial effort to get this program off the ground also included a need for greater attention with respect to Black and Latino business people and workers, whatever the case, whatever category we're talking about. And so that's why I keep asking these questions, because to me, it's not enough to say, well, there's a good female participation, because that doesn't give us the breakdown that the initiatives from the very beginning were intended to address. And so perhaps as we go forward, I'm certainly going to support the motion for this, because we don't gum things up here, but we'd like to get further clarity on that sooner than later.
Yeah. Because just to put it flatly, I don't want to be in a situation where we're approving things and the people that live there can't afford to live there anymore once the project's done.
Well, this contract is really just for our temporary staff, so not related to anyone who lives anywhere.
Right, no, completely understand. A broader point.
Yeah. Mindful of the cost of living in New York City. Okay, so thanks everybody. I think.
Thank you.
This is, back to the matter at hand. Diana, this is a request for our approval to extend for 1 year the panel for temporary staffing services, right?
Yes.
Let's do it.
Now before the Sunny May board is a resolution that was transmitted in connection with this item, assuming the first and second previously entered for the Sunny May board. All in favor, please say aye.
Aye.
The motion is carried, the resolution adopted.
Now I'm told we're going to skip item number 9, and with all this, I don't even remember what it was, but we'll skip it. So we're going to move to some informational items and then get an update of the commissioner's report, the president's report from Ruth Ann. Number 10 in our materials is we get this every time, the current agency procurements and contracts which are in the lobbying restricted period, important informational item. There is the MIC activity report for the month of April. When you look at that, you will see I'm not asking you to come back up here, Mike, but the first 2 months of the new fiscal year, we're a little down in surtax revenue, aren't we? Like, on a 3-year, we're lower than we've been in a while. So less transaction volume. We'll see what happens.
Certainly less excess balance.
Yeah. It's only 2 months into the year, but we're a little low. We'll keep an eye on that. If there are any questions about those reports, which are in the materials, let's turn it over to our president, Ruth Ann. Good morning.
Good morning. Thank you for giving me a minute here. I just wanted to, since James and Joyce were not here at the beginning, I didn't want to do a president report. Not that it's so, earth shattering, but I thought it would be better to wait. So I'll just do it at the tail end here. So happy summer to everybody. I wanted to give a quick update on the legislative session that wrapped up earlier this month. As you all know, we proposed this very aggressive, innovative plan to increase housing production across the state. We are very proud that it went bold and that the governor really made a big, broad effort at addressing the housing crisis and specifically at boosting the state's housing supply. And though we were not successful, we really think that the conversation about solving the housing crisis is now very front and center, and certainly on the wonky blogs that I read, it's sort of all you can get in the feed. And so I think we feel happy that we didn't take a more narrow or lesser stance and perhaps gone a different way. We think we've really made it impossible for anybody to really ignore the growing housing crisis that is both in New York City as sort of an urban and suburban issue. The governor's also made it clear over the last couple of weeks that she's committed to addressing the housing crisis and is not planning on walking away. She's willing to work outside the budget process, and that there's still opportunities to talk with the leaders and the chairs to come up with a solution. So mostly I would say stay tuned on that. We had about a 24-hour reprieve from the end of all this before we were back with the governor talking about what we were going to do next. So we still remain very committed to the efforts. On the legislative session, just 2 Sunny May specific things. One, the legislature extended our bonding authority through 2025. So our bonding authority, our authority to issue bonds, does expire frequently, and we have to go back and ask them to extend it both for HFA, for Sunny May, and for HDC. So we got an extension to 2025, and we also increased our bonding authority by $500 million. So we are now at $10.7 billion. So that's just sort of our cap that we can issue up to. And we actually have not had an increase in our authority since 2011. So that was great. We were happy to get the increase. Secondly, we had a piece of legislation passed that will allow Sunny May to purchase mortgages for modular or manufactured homes. Right now, we purchase, and we're going to do it in a different structure as personal property, not real property. So currently, Sunny May allows us to buy mortgages for real property only. This will allow us to target the sort of modular and manufactured home market, which will help us better meet our goals of assisting low and moderate income New Yorkers. Manufactured homes are primarily financed as personal property in New York State, and then folks do sort of a title process to establish ownership. And so this is going to allow us to be a lender in this market that is generally a very expensive market for people looking to buy modular manufactured homes, especially when they're in a home park. What else can I say about that? We will, and as it relates to the MIF, it will also allow the MIF to provide pool insurance on those loans, as it does for all the other Sunny May mortgage loans purchased under its forward commitment. So we're really excited about this. It allows us to get into this manufactured modular home space in a way that we had not been. We could only really do it where people had a modular home on property they owned, and we couldn't finance anybody's modular home in a home park. And those people were subject to sort of what are traditionally called kind of like chattel loans, which tend to be very expensive. So we have to roll out the program and get it sort of going, so that'll take us a little bit, so we'll come back to the board. I think maybe we can do an informational when we sort of get things up and running, but we are excited to get this through the legislature, given how many things did and did not get through the legislature, so it was we were really successful and excited about that. And that's really all I have for this one, those two legislative things and
a couple of questions, but initially, with respect to this, when we're talking about modular homes, and so, forgive me if I just need a little more understanding with respect to this. Are we talking about homes that, like mobile homes? We are talking about
factory-built homes.
I know about factory-built homes, but when they're on the property, then they get pipes and, wiring and everything into the ground. And they're not being moved to someplace else, but so these are mobile homes.
Yeah, I mean, I think there's a little bit of a nomenclature thing where most sort of what you think of as a mobile home and a mobile home park, that those homes are not actually mobile, right? They never get moved. In fact, many of them have been there since. You drive by some of the older parks that you may drive all over New York State, right, potentially at different times. You will see, like, some manufactured home parks that have very old, like from the 1970s, and they are mobile homes, but in fact, they have not been moved for
They were
years.
mobile once.
They were mobile maybe to get
They
there,
were
but
towed there.
these are primarily, so they're not on wheels, they're affixed to a foundation and they have pipes, so they are, but they're in manufactured home, or what maybe previously would be called like a mobile home park, but now we call it a manufactured home park.
Okay.
So they don't have wheels, they get affixed to a foundation, but they're on a land lease, so they're not real property when you buy it. So you go to the factory, right, to buy a $100,000 manufactured home, you can't get a mortgage for that. Usually you're paying a part of it up front, so that doesn't exactly exist yet, and then when they put it on a leased piece of property, you can't get a mortgage because you don't own the property.
I see. Thank you.
So it allows us to give someone a $100,000 mortgage for a manufactured home that otherwise they would go get kind of like a credit card loan for.
Okay, so I'm assuming that that's of greatest benefit upstate as
Yes.
opposed to
Long Island.
In Long Island, yeah. There are
Riverhead has a huge inventory of mobile home parks, really important,
Riverhead.
very important.
Yeah, there are
Bohemia.
3,000 of them across the state, mobile home parks.
There are
manufactured home parks, so
3,000 or
3,000 parks.
parks.
Yeah, so, and I think, I forget the number of units within those, but it's not insubstantial, and there is a lot on Long Island. More than,
Little House Nation.
well, I think there's a lot of need to replace what are very old and substandard, but not a lot of access in the market to be able to finance those. So most people don't really have a way to go get a 18% credit card loan, on a 70 or 80 or $100,000 house. But if they could get a 30-year mortgage, they could potentially upgrade.
Okay. Thank you.
And so this only applies to homes that are in trailer parks, as it were. It doesn't apply to manufactured homes or prefabs that might be built just on private property.
It's not as needed because there you can get a mortgage.
That's what
Yeah.
I had a question. Is there any legislation at all on the construction of the modular homes? Because one of the issues is you may have a modular home or a building, apartment complex that's being built, prefab, but they're hiring individuals from out of state to come in as a part of a team to actually build it, so the people here never get the contracts.
I mean, certainly this legislation is just parochial for us in Sunny May and our lending. I think that there certainly are a lot of, I think there's probably between 5 and 10 manufactured home factories in the state of New York. We went and visited a bunch of them a couple of years ago as part of an effort to grow that market, but there are frankly a lot of them in Pennsylvania. So a lot of people do, on the sort of, I think, multifamily modular are shipping things in from Pennsylvania. But I'm not, we could find, I'm not sure what legislation may exist as it relates to the factory side of the construction of them.
The building of it, they're prefabbing them in Pennsylvania, but they bring their teams with them to actually build them here. So the people here never get the opportunity to work on those projects usually.
Yeah, we can find out. We do have some folks who use.
We have one MPE on Long Island that actually does modular plumbing for modular.
Yeah, we have done a couple multifamily modular. We could ask them. I do think they do in Long Island. I do think they use some local labor, but we can follow up on that.
Great. There's a bill sponsored by Senator Jessica Ramos that will require union labor on all of the modular construction. So there is definitely
she's writing it for union labor to have access
Exactly.
exclusively, or?
Yes. They would have to have a union member to partner or oversee the work being done. A few Habitat for Humanity and NYSAFA and a few other groups opposed the legislation that the governor actually vetoed it last year.
Wouldn't that raise the price of the housing?
Exactly.
That's why.
That's why.
It's a perennial issue.
Joyce, let's go to Wallace.
Yeah, so that was the conclusion of your report?
Yes.
Okay, so, again, you know what I'm going to ask, so I'm going to just have to ask again. We've been discussing the whole notion of this agency's, Sunny Mae's engagement with respect to the issue of minority development, minority business development. We've seen on the agenda for the last quarter, every quarter somebody from Empire State is supposed to be here to talk. And every meeting, nobody is here from Empire State. We're about to go on summer break. We'll be 6 months into when we were trying to have some conversation, serious conversation about this. And I know I'm not here as an individual. I'm here as representative of the majority leader of the Senate. And I know that the issues that I'm really mandated to focus upon include this really upfront. And I'm not doing my job if I don't mention these things, with all due respect. And I didn't bike my 9 miles this morning because the weather wasn't too good. But I'm trying to still stay at peace here. But we just can't keep doing this. We're kicking this down. It'll be a year since I've been on this board. And it'll be a year since we're still waiting to just get basic information before we can even make some suggestions or observations. So yeah, everything's great. That's great. That'd be wonderful. But everything can always be better. Okay, that's just been my experience in life as well as in government or business. Everything can always be better. The day you can't get better is the day you should stop. Okay, and I know that's not where we're at. There's many exciting and positive things going on, but I'm not hearing anything. I'm literally not hearing anything. Pardon me, about this. And I said literally every month I see ESD. ESD is going to come up, and somebody can't.
We're going to do it now. That's the next item.
It's not ESP, but it's our own.
Yeah.
We're going to go into executive session to make the presentation on MWB.
So I was done, but the meeting wasn't done. Sorry, I didn't mean to say it implied the meeting was done. Just my president's report was done. But there's more.
Okay. I'll
The
put
PowerPoint is on the computer.
Okay.
Oh, we have two presentations we're going to do in
Yeah,
exec session.
an exec
So
session.
We,
Is anyone from ESD involved with this?
it's all of our
In-house.
data on MWBs.
so everything you said about ESD still stands.
Yeah, I'm afraid so.
But internally, yeah, I think we are going to get a report.
Well, I'm certainly looking forward to the report, but if it all leads back to we have to work with ESD, that's, I'll wait. I'll withhold my comments till the presentation's held. Obviously, we'll need to be fair in any commentary, so I'll wait.
I think there are a couple items for the executive session.
Yes.
And so we've got to do this, we have to turn to Diana, who will take the steps to get us into executive session, then we can start.
Okay, I'm going to ask for a motion and a second to go into executive session pursuant to section 105E to discuss collective bargaining agreement negotiations and section 105F of the open meetings law to discuss the financial, credit, or employment history of a particular corporation.
Motion?
Motion?
So moved.
Second.
Second.
Okay.
We are in executive session.
Let's wait a minute before they turn off the.
Turn off certain
Yep.
people's TV screens and
Yes.
stuff, right? Can you do what it
Yes.
takes to get us
I
back to?
will ask for a motion and second from each board and to go back into public session.
Motion.
Motion on behalf of
Second.
both
Second,
boards.
great. And all in favor?
Aye.
Aye.
Okay, motion passed. And we are now back in public session. There were no votes that were taken in the executive session. So here, now we're going to take up, do you want me to do your part?
Yeah.
Okay. We're now going to take up an item that was sent to the directors by separate cover as an addition to today's agenda. This was item 9 on the agenda. It's a resolution authorizing execution of a collective bargaining agreement with the union representing Sunny Mae employees. Now before the Sunny Mae board is a resolution that was transmitted in connection with this item. Assuming the first and second previously entered for the Sunny Mae board, all in favor, please say aye.
Aye.
The motion is carried and the resolution adopted. There being no further business for the Sunny May Board, I will now ask for motions and
So
seconds.
moved.
Second,
Second.
all in favor?
Aye.
Okay, the motion is carried. The Sunny May meeting is adjourned. Next
No
meeting.
July meeting, right?
No
No
July meeting and August 10th.
August
August 10th, we're back to August 10th.
Right.
Thank you very much, everybody.
Now, aren't you
That's-
guys glad
that's
you're
the
not
cool part of
responsible for
it,
ESD
Let's hope,
anymore?
right,
Yes.
right, it's all about August, right?
Folks, friend.
Let's hope.
It's a great, and look, we're already.
But we had fun, but,
Oh, you guys are a
It's
client of
it's
ESD?
It's a great place.
What?
You were saying you guys are a client
In a
of?
sense, yes, we have a funding agreement on the representing our local community.
Oh,
Yeah, it's really.
That's cool.
It is cool.
Yeah, it's like the same.
The phone calls that I get, like, I get people to see.
I don't even do this.
It's a little
It's
bit-
literally the same conversation.
Yeah.
Thank you.